This week we are here with Max Altschuler. Max is the founder and general partner at GTM Fund. GTM stands for
Go to market.
Go to market. He's a general partner at Go to Market Fund, where they are investing in early stage business to business software companies and supporting them with sales and marketing resources. Their investor network is comprised of over 300 go to market leaders from the world's leading software companies, which you may have heard of: Salesforce, Microsoft, Snowflake, Datadog, Zoom, and many more. They started in early 2021, so it's relatively young, and they have 75 million AUM. What's AUM stand for?
Assets under management.
Assets, we'll get into that. Prior to the GTM Fund, Max was the founder of Sales Hacker, which was acquired by Outreach in 2018, and served as the VP of Marketing at Outreach from 2018 to 2022, seeing the business go from roughly 25 million to over 250 million during that period. That's a 10x under Max's eye. He's an angel investor, advisor, and author of 2 books, both of which I've read, one of which I read in about a day and a half, couldn't put it down. And when he's not working, he is living a purposely slow life with his wife, 2 kids, and 2 King Charles Cavalier dogs. Without further ado, Max Altschuler.
Thanks for having me.
Thanks for coming in, man.
Yeah.
So Max is in New York for the summer or for
the summer, yeah.
Got it.
Scottsdale based.
So what's going on with the house while you're here?
Which house?
How many houses do you own?
Oh man, 3 at this point.
What's your home? What's your main residence? Scottsdale.
Scottsdale, yes. And we are rebuilding kind of my dream backyard right now. So that's the big project. Should be done probably December. Adding a pool house, the guest house, pool, chipping putting area, sport court, basketball court,
waiting for the
playground,
chipping putting area.
Got some citrus trees, garden boxes, you know, the whole thing, and like big open field for the kids to play in.
Got it.
One of those trampolines, yeah.
So the fact that you're putting in this much work, are you going to stay there? Because you are probably one of the most nomadic people I've ever met.
Yeah, that's what our parents say too. Yeah, this should be the place. This should be the one. So we're excited, very excited. Yeah.
Amazing. So I've known you for almost 20 years. I kind of know what you do. You're kind of like me, where you're kind of a Swiss Army knife, where you do a lot of things.
Yeah.
How would you describe to somebody, what do you do? And I guess with everything, like what do you do? What do you do, and what are you doing now?
Yeah. So right now, I'm the general partner and founder of the GTM Fund. You know, we came to market with this unique concept, which is, what if we raised a venture capital fund, invested in early stage software companies, but the different approach is that we raised most of the money from go-to-market leaders at proven companies. So a lot of our LPs are investors. LP stands for limited partners. They are investors. They are VP C-level sales, marketing, customer success leaders at some of the biggest software companies. So you named it before: Salesforce, Microsoft. We have folks from LinkedIn. We have folks from Zoom, apps that use every day, Slack, you name it. And they're the investors in our fund. So when we invest in a company, we don't just give them money, but we give them resources to help them with sales, marketing, and customer success. So we actually help them grow their businesses and provide resources to give them further distribution, which there's a quote from Justin Kahn, who's one of the founders of Twitch and ran Y Combinator for a while. Big guy in the startup scenes, and he says, first-time founders focus on product, second-time founders focus on distribution. Basically, the people who have been around the block know that that's really the crux of how you're going to succeed, in a startup, in a business. So, we come in and help them with that support. 75 million assets under management through next year. So we raised, this is our second fund now.
Does that grow? Can that grow day by day, or
yes.
Does that decrease?
It grows. It grows. Well, we're in the private market, so if we have a company that goes under, it can decrease. But I think where we're playing right now in the earlier stages, it's increasing.
So when you're describing this, I'm thinking like Shark Tank, and whereas like when a company comes into the tank, and let's say Mark invests in a company, and now they're expecting Mark to be hands-on. Now let's say you have a VP from Datadog or a C-level from Salesforce. Mm-hmm. are these companies that you're investing in expecting them to be hands-on? Are they expecting them to be there as a lifeline when they have questions? How does that work?
It's more of the lifeline than for them to have this like access to this one person and be hands-on. We do give them access to our LP base, and we have LPs like the SVP of global sales from Datadog is an LP in the fund, so he'll come in.
Massive.
And we'll have a company say, you know, hey, I need help with building out my first comp plan. You know, how do I pay my reps? How do I set up a base and, you know, commission plan? What's quota going to look like? I don't know any of these things. I'm a product founder. I know how to code. I don't know, you know, how to set this up. Okay, well, we'll connect you with somebody who's done that from 0 to 200 million in revenue at a software company before, so they can help you set up comp plans that won't break in 4 quarters, 6 quarters, 8 quarters from now. And if you have a broken comp plan at any point in your company, it sets you back a quarter or two because reps aren't incentivized to continue selling. If they know that a account is going to be taken out of their name because something's breaking in the comp plan, or they've hit their ceiling and what they could get paid, or they've hit, you know, the extent of their accelerators and they can't make any more money, they're not incentivized to sell anymore, right? So it's very important stuff. We have people who come to us, founders who come to us and say, hey, I want to build my first customer community. Can you help me with that? And we have the person who built the Atlassian community from scratch. We have the person who built the Salesforce community from scratch.
What does that look like? Because like I hear customer community and I'm probably wrong. I think like a Discord.
Well, yeah, it could be a Discord, could be Slack, could be something that's built into one of the community apps, which, you know, Salesforce has a community, you know, software that they roll out. But, you know, any company that wants to get a list of or get a group of their users together to talk about, hey, what are the you know, new features and functionality that you want us to build for you? What are the, hey, here's an event that we're throwing in New York City. We want to get everybody there in person to talk about, you know, the day-to-day of your job, the pain that you're going through right now. How can we make that better? How can we tie what you're doing to revenue? Things like that. So, you know, those things are really important. And every company, it's really a trickle down from the founders. Like the soul, heart and soul, the culture of the company comes from the initial founders. So what core competences a company has usually start with them. And then as you hire more people, you branch out from there. So you might have a founder of a company who's very great, you know, very good at building community, and that might not be an area where, you know, you need as much help. In other cases, they're, you know, really good at demand gen, paid marketing, you know, things that are more analytical. In those cases, you may need support on community. You may need support on some of the more customer-facing stuff.
When you go, now are you trying to seek out companies or are they trying to seek you out?
Both. I'd say about 75% of our deal flow comes in through our LP base. So our GTM leaders all act as nodes for
so it's like
deal
they're
flow.
being pitched and they're like, hey, talk to GTM?
Yeah. Yeah, it's a great model. So, for example, if you have the CRO Procore, which is a public company, it's in the construction, prop tech, and insurtech space. You know, if a startup or, you know, founder is building something in that space, they're going to potentially reach out to Dennis and say, hey, you know, you've taken a company from 0 to 700 million in revenue in this space. Can you give me some advice on what I'm doing? If it's interesting to him, he could angel invest or advise, get equity that way. Or he can send it to us, and now he develops a basket of companies he's now an investor in because he sends us a company. Maybe the head of sales at Square sends us a company. Maybe the head of sales at Datadog sends us a company. And if they invest in us and we do all 3 of those deals that they send us, now instead of just being all the way in their space, they now have access to deal flow in, you know, different verticals. So the head of sales at Square sends us a fintech deal. The head of sales at Datadog sends us an observability or, you know, DevOps deal. And the Procore one sends us, you know, an insurtech deal or something like that.
Is a big part of the payment and kind of how you guys are able to grow, is your business equity based, or are they paying you a retainer? Or
it's traditional venture capital. So, you know, we you know, if we have, let's make the numbers easy. If we have 100
well,
million.
also explain it in layman's terms, because just explaining how venture capital works.
Yeah. So, you know, we'll have investors who invest in our fund. Let's say that's a $100 million fund. we have 10 years that we earn fees on that, management fees, and to deploy that capital.
You said 10 years?
Yeah, it's a 10-year time horizon, and that's what the expectation is to get money back out of it. So, for example, your $10 million fund, the traditional fund fee breakout is 2 and 20. So you get 2% a year for 10 years in management fees. So 20% of the fund actually pays, for the cost to run the fund, and then 20% carry. Once you return the fund to your investors, you get 20% of the profits. It's called carry. So if $100 million invested turns into $200 million, you double it, you get 20 million of the 100 million that you added to the initial 100. Let's see, what else is good to know? So, you invest in companies, support those companies. It's usually a 7 to 10 year time horizon, especially for the stages that we're dealing at. So we invest at the earliest stages of company's formation. So it takes a while for them to get off the ground and going. Some companies we invest in where they're pre-product, and we're helping them refine what they're going to go to market with, how to get product market fit so they can start selling that product. And other companies we invest in, they already have product market fit. They already have $1 million in revenue maybe, or a couple $100,000 in revenue, and then it's just, okay, let's pour gasoline on this fire and help you scale this thing. So
are there any companies that you're bringing on who kind of look like, all right, you had something, but you did it wrong. Mm-hmm. And now we see the potential. Before you die, we're going to revive you and we're going to launch you into the atmosphere?
Yeah, it's a typical startup thing called pivoting, where they may have a little bit of traction, but they see a low ceiling or something like that, and they're like, hey, this isn't a venture scale business. We need to figure out how to pivot this into something that is. And you've seen that. I think some of the biggest businesses that are familiar to you started like that. I know Instagram was one of those. It wasn't initially a photo sharing app the way it is today, and they had an early pivot. I don't know. You could look it up, but I do know that Andreessen was, I think, their earliest investor, and they invested in a company that started as what Instagram ended up being, and then Instagram pivoted to that, and so they had two companies in the portfolio that were now like competitors. And Instagram won big, and the other one didn't.
I remember it from like 2011, where it was just photos, and like back then everyone was using there was like 8 filters, and you did a photo, a filter, and it's just a lot of that.
Yeah, I mean, it's definitely changed a lot since it started, that's for sure. But it blew up quick, and they had a great exit. I think they were, what was it, like 12 employees or something like that, and ended up selling to Facebook for $1 billion or something. So that was a huge one.
And that's probably a big goal for like what you guys do. It's like trying to find that unicorn.
Unicorn, yeah.
Trying to find a unicorn that's worth, that's a 12 employee company. That's then going to be worth it, because if you find a company that then sells for $1 billion.
I did that as an angel investor. So that's kind of how I got into this. So I'll give you my full background. I started my career, actually in college. I tried to start 2 companies. First company was a bike share program, like these city bikes that are riding around cities. They only existed in Europe at the time. So
a bike share program in Tempe.
Yeah, that's what I wanted to start. I had done a year abroad in Barcelona. They had the bikes. I was like, wow, this would crush it at ASU. It's flat, it's hot, people want to get places faster. There's a bunch of parking lots that nobody uses that are super far away. The university can make more money from it. So I ended up applying for this business plan competition at the university. I won.
Were you in the business school?
No, I was in the entrepreneurship program.
Gotcha.
And it was one of the first years that existed at ASU. And I won. They gave me a $2,000 grant. Didn't really move the needle on anything, but it was encouraging. And so we won this
$2,000 grant. Go make a logo.
Yeah, pretty much exactly what we did, which was fine. I mean, we made a logo, made a website, paid somebody for design help on the deck. I mean, like $2K basically gets you enough to create collateral to like raise more money, like to look real enough where you can raise more money.
And back then, $2,000 kind of went a little further.
Certainly, not much further, but certainly a little further than it does today. But so we ended up getting exclusive rights to commercial bike sharing through the university president. Got a signed contract with that. Ended up working with the university architect to establish locations for the bike racks on campus. This is amazing. And then
what an experience For what? At
It was better than an MBA. It was better. I learned so much. I remember we got like frozen out by this one woman at the university for like 2 weeks, and started to get nervous about like, oh, what's going on behind the scenes here. And so I went to her office one day, and her admin, what do they call secretary? I don't even know. Sure. In my world, we don't have secretaries. You like admins and EAs and stuff. But her secretary goes, yeah, she's in meetings all day. Like, come back another time or schedule an appointment. And this person wasn't responding to me. I couldn't schedule an appointment. So I just sat there for about 4 hours. I brought my laptop, did my schoolwork, whatever. And eventually she was like, okay, fine, I'll see you. And they did tell us that like they were starting to talk to a couple other companies to run this.
Oh, wow.
They were
all right, Max Altschuler has this great idea for the university, but he's a student from New York.
Yeah.
Let's see if we could push him out and actually take this business for the university.
Pretty much. They looked at us and they were like, what are like 22-year-olds going to do with this thing?
Oh, my God.
There are a couple proven vendors here. Why didn't we talk to them? And I was like, well, we have this, exclusive contract and blah, blah. And they were like, well, there's ways of getting around that. And so we ended up having this conversation. We were like, well, okay, there's a middle ground here. Like, what if y'all find the vendor, but like we run the program?
Well, it's interesting your mindset. Well, tell me if this is right. Did your mindset go to like, how can we coexist? How can we do this together? Or were you initially like, screw you, I want to clobber you, I'm going to call an attorney, we're going to fight this? Was it the fight route or was it the collaborative route?
It was the collaborative route.
It's amazing.
Listen, you're not going to beat them.
No, but especially to even want to like think to go the collaborative route at such a young age is a testament to your future.
But so it's funny. You have the meeting, you soak in the information, you set up a follow-up time, you leave things amicable, but like you bring that home and you decide what to do. Emotional reaction in that meeting is not going to get you anywhere. It actually can hurt you more than help you. So like for me, it was clear that like, okay, let me take this back, digest it, figure out what to do.
And who was advising you at the time? Because I didn't even think about that. This wasn't who's advice? Is your dad like?
No, we didn't have really anybody to turn to on this. We were just kind of like, all right.
Two 22-year-olds making this decition without getting advice.
It was just me at this point. Like I went in, I had this meeting, I went back and told my partner what was going on. And anyway, long story short, the business ended up failing because we couldn't raise the money we needed to raise. And it was 2009. So we're coming out of, the great financial crisis. Nobody was giving us 22-year-olds a bunch of money to manufacture bikes and bike racks in an area where 9 bikes are stolen a day. Like, we would have been out of business quick. It is the best thing that ever happened that this business failed. So right from there, I graduated college, started another business called Last Call Social Media. It was running social media for bars and restaurants because at that time everybody had a Yelp page, a Facebook for Business page, Foursquare page, all that type of stuff, and they needed help running that. And so we started that. We started making money, and we took it to Costa Rica and Nicaragua and ran it from there for 5 months and made American money while living in a place where you didn't need a lot to live.
So how were you getting the content from the bars? Like, what was the process from soup to nuts with your client?
Yeah, I mean, we had like I think it was like Trello we used, but basically like an early Asana project management software.
Was Trello alive then, or was it a form
I don't know if it was a form of Trello, something like that. I think Trello existed then. I actually think it was Trello, but it was something like that. And we kept everything in there with them. Hey, this is what needs to go out. We're doing Taco Tuesday promotion. This needs to go out across all our platforms. And we made some good money. Had a good time. We surfed and hung out in Costa Rica, Nicaragua. I ran this business. It was with 2 friends from college, and that business ended up kind of looking at each other one day and be like, hey, we're too ambitious for this. Like, what are we going to do with this thing? And we were teaching ourselves how to code, how to program, and build websites into the Facebook iframe. At the time, you could build like a mini website into Facebook for business pages.
Teach yourself to code how?
Using a program called Lynda, which LinkedIn then bought.
Lynda, like Aunt Linda, like the name Linda?
Lynda, yeah. It was it was a software company that had like programming courses. And one of our customers was like, hey, have you heard of Udemy? I was like, what the hell is that? She's like, yeah, they have like programming courses. So I looked at it, and they had a business development hire job opening on like the footer.
I remember
And at this point,
coming back to me.
At this point, we knew we had to do something, shake something up. So I ended up taking my first interview call with Udemy for the BD job in a payphone, one of those like call centers in Nicaragua. And like you had one day a week in the town we were in where like electricity went out. You didn't know which day it was and when it was going to be. So I was like, oh man, please not now. And so I took that call and ended up flying up to San Francisco and did 7 hours of interviews, got that job. And I was the first one in, last one out. I'm like, nobody's going to outwork me here. And it comes back to, kind of the mentality that I've had my whole life, which is like, yeah, I might not be the smartest person in the room, but like if I'm into it, I'm going to be the hardest worker. And I go back to my hockey playing days. Like, yeah, if I'm not the most talented person out there, it doesn't matter. I'm still going to outwork everybody. And
So
I think you could win like that.
Where did that come from?
I don't know. I think that I've always been extremely competitive. It's been ingrained in me for one reason or another. It's funny. I look at my parents and I'm like, I don't know where it came from, but I do think like kids are pre-programmed to an extent, and so like that was always something that drove me. I think it was always mostly competitive with myself. Like I know I could do better, and I think there's some of that comes from my mom's side, which is she was raised and she'd come home with a 98 on a test, and her parents would be like, "Where are the other 2 points?" Like that's the question instead of like great job.
At school, and were you getting
terrible? I was a terrible student. I've always lived by the C's get degrees mantra. Classic ASU student.
ASU.
Classic ASU student.
Yeah.
Yeah. I think this is a complete tangent, but I don't think the way that we do schooling is the right way to do things. So you're kind of sitting in.
No, I mean I look at some of my most successful friends, and like none of them had anything to do with university or any of that. It was being in the university, like being within the university and around people.
Yeah.
Inspired them to do things, and their life outside of it inspired them to do things. And it's really just learning from real world experience.
Yeah.
And just fucking doing.
Yeah. Well, I was scared coming out of college. I mean, we graduated at a tough time. The entire world, I mean, the economy had just collapsed. You came out in 08, I came out in 09. I mean,
The worst.
We were it was a really shitty time to look for jobs. And so when I got this one, I was like, I'm never going to have a resume again. I'm never going to look for jobs again. Like, I'm going to make sure that I'm going to cut my teeth. I'm going to put in whatever I have to put in. And I learned some amazing things. So, I get in to Udemy. They kind of gave me the supply side, the instructor side of the education marketplace. And I was an 8th employee, 2nd business hire, 1st person focused on the sales side of the business. And I needed to find a way to generate more revenue using less resources. That's what sales hacking was. And so I built a team of virtual assistants in the Philippines and taught them how to be sales development representatives. And then we leveraged some early sales technology that had a handful of customers and helped them with their product roadmap. We built web scrapers using outsourced Python programmers on Upwork to scrape lists of leads. So for example, if we were selling instructors on creating programming classes, we would go and scrape the bestseller book lists of all the programming books. And then we would reach out to those authors and say like, hey, congratulations on your best-selling book. You should pair this with a course, because this is a natural way for you to upsell everything that you're doing.
Absolutely.
Your course could be $300 to teach them how to program, and your book is $29.99. It's like, you should be plugging your course in your book. Any like talk you give at a conference, you should be saying, oh, you read my book, like go take my course now. So that worked really well for us. Other VCs and founders would ask our VCs and founders how we were growing so fast in this area, and they would point them to me. And that spawned the company Sales Hacker, which was my media company.
So was that your idea to kind of scrape and find out who were the authors to then go reach out to?
We had to figure out a better way to do it, because the companies we were competing with all had a lot more money than us. And so they just kind of threw headcount at things. They paid for stuff. We couldn't afford to do that. For me to go build that web scraper was maybe, $500 on Upwork, and then we get a ton of free data out of it.
That's crazy. You would think that would cost $100,000 to build. $500.
Simple, yeah. Phantom JS, or it's like Python. You can put one of those together pretty quickly, and then it basically can go on like Amazon and type in programming category or tech category, whatever it is for books, and then it'll literally like scrape the page and then hit next page for you, and then scrape that page. Like, it'll run the whole thing.
And then give you like a CSV with all of the authors. And
title, author, all that. And then I have a virtual assistant in the Philippines, append it with email addresses. They go to they Google the author, go to their website, find the contact us, take the email address, put it in that. Then you plug that into one of the early sales engagement technologies that we're using at the time, and that would put them into a sequencing campaign. So it would send them an email, a week with different copy, and I automated that too by like building out these Google Docs, like with if-then statements. If the person responds positively, send them this. If the person responds negatively, send them this. If the person responds with, I'm interested, let's set up a time, look at my calendar, pick an open slot. I got to the point where it was like I'd walk into the office and it's like, look at your calendar. Oh, I got 8 phone calls today with instructors. I never sent an email or anything. My team in the Philippines.
And now, how much research are you doing pre-call?
Usually there's a link in there to like their website or the book that they wrote.
You got it down to a science.
Yeah. So it's all prepped, and like the more you run the process, the more you can massage it and then give better instructions to other virtual assistants in the Philippines. And I found that like I've always used virtual assistants in the Philippines. They're phenomenal. So that was a huge help. So anyway, that turned into the media company, Sales Hacker. Sales Hacker, I ran for 5 years, and it was a great cash flowing business, but not a high upside business, meaning software companies are selling for 10, 20x multiples on the revenue that they're bringing in. Media companies, you'll get like 1 to 3x revenue or something. It's actually usually more on profit, on EBITDA, than it is on revenue. So I took some of that cash flow and I started angel investing and advising early stage companies.
What was the first company that you invested in?
Outreach. So $3 million valuation pre-seed. Most recent valuation was $4.4 billion. So that was before you were talking about, the goal is to go find a company and, a dozen employees that eventually sells for $1 billion. Well, you can do better than that. You can find a company with 3 employees that, eventually.
What was it about Outreach that stuck out to you?
To me, it's always a couple things. So, main thing is the main founder or the founding team has to be spectacular, has to be, really the only way to describe the person is they have to be a machine. Some people like to use the word animal. I don't really care. But you got to be a machine. You got to be just run through walls for your business. And you have to have a vision. You have to understand a space really well. That space has to have tailwinds that is going to propel the space, not hinder it. And they have to have some sort of why you. What's your unfair advantage in this space that you have over everybody else? If we look at a geospatial mapping company that's doing, mapping APIs, so they, in layman's terms, they like build Apple Maps inside of apps, let's say. If I talk to a founder of that company and I say, okay, this is great, sounds interesting, why you? Well, I built this at Uber, and my 3 co-founders all came from Uber engineering, and we already built this. Okay, that's interesting. If you're like, oh, I'm like a marketing manager at Spotify, it's like, well, you have no special access secret sauce here. This doesn't make sense for you. Like, that's a harder bet to make. So, Manny, a meet at Gong. So I was early investor and advisor in Gong. They ended up, their last round was $7.25 billion. A handful of others that I was able to size up at the early stages and build a track record upon. And so I think I've had 6 or 7 companies that I was an investor in alone, not even advisory, not even employee, that ended up being multi-billion-dollar companies.
So you went Udemy to Sales Hacker.
Yeah.
Was there there was overlap, but at what point did you leave Udemy, go to do Sales Hacker, and then go and be a VC?
Yeah, Udemy was there for about a year and a half, 2 years. Took them through their seed A, B rounds of funding, so like 8 to 60 something employees, I think it was, and then yeah, started Sales Hacker. First, it was kind of like a private meetup, just 4 of us geeking out on some of the things that we were doing in our own companies, and then through a conference, went really well. I made more money from that conference in 6 weeks worth of work.
Let's talk about that. What made, because I wanted to touch on this. Yeah. When you started your conference, 1, what'd you call it? 2, what made you want to throw a conference? And 3, how scared were you for those 6 weeks?
Sales Hacker Conference, because it was just an extension of the Sales Hacker meetup, and sales hacking is what we called it. So it's kind of like Sales Hacker. You're like, now it's not just this media company, it's a platform. Well, so while I was at Udemy, we had a 4-person meetup. We would just geek out and stuff. We said, okay, we'll expand this, but let's only bring people that add value. Over the course of that year, we'd meet once a month. It went from 4 people to 20 people. At the last meeting, I knew I was going to move on and do something else. So I just said, hey, who here would be interested if I threw a conference around this? Maybe 100 people. We'll get a bigger group together, and we'll the 20 of us can get on stage and share some of the stuff that we're doing. But there's obviously demand for this, and it turned into a 300-person conference. Charged $300 a ticket. Got sponsorships. Kept costs low. I made more off that conference than I was making a year in my Udemy salary, not including stock, of course, but just in my cash comp. And yeah, I was a little scared, but I kept the burn low. I kept the expenses fairly low, and so that I cleared that hurdle pretty quickly. And then it was like, okay, well, if this works, great. If it doesn't, I won't lose money, and I'll just go, get another job at a tech company or something. And it worked. And then I did a New York event, and then we launched saleshacker.com, which was the publication. We did, paid meetups in 20 cities across 5 continents.
Well, with doing these paid meetups, how do you know how to, because you haven't thrown an event before, how do you know how to take payment? How do you know how to send people their tickets? How do you know how to do sign-ins?
You learn, and once you factor in the pricing with outsourced event teams and stuff like that. Okay. So, they come in and help you with a lot of that, signage, run a show, all that, vendor payments, vendor scheduling, everything. So you kind of learn on the fly. I mean, one of my biggest fuck ups was I lost a lot of money on an event. And this was towards the end of Sales Hacker. I ran it for 5 years. And towards the end of Sales Hacker, I saw the writing on the wall where it was getting a lot easier for companies to throw their own conferences. So you used to have customer conferences. Companies would have them when they had enough customers, which was usually pretty far along in their business life cycle. But then investment started to speed up in 2015, 2016, 2017. All of a sudden, these early stage companies were flush with cash, so they were throwing their own conferences. Next thing you know, the making money off conferences gets really hard, and got ahead of my skis, lost a bunch of money on one of the conferences, and at that point,
bunch of money?
Like $500-600K.
$500-600K.
Which was big.
Because obviously you say lost a bunch of money. I probably lost like 10-20 grand.
No, this was a lot of money for us. I mean, the whole business was making like $3 million a year.
Wait, so how do you lose $500-600K from an event?
Thought we were gonna have a lot more people there. Thought we were gonna have a lot more sponsors. Got over my skis.
You, Max Altschuler, the one who's rubbing pennies together to throw an event, and not in a negative way, but in a positive way, where you're able to do things so economically. How do you get to the point where you're spending that much money on an event?
Market turned, mixed with eyes bigger than your stomach.
But did you have a performance? Were you paying
no?
So this was $250,000?
This was a joint event we did with Salesforce.
Okay.
And so we got a lot of assurances from them that didn't necessarily pan out the way that we or they anticipated, and we took a lot of the risk on that event in order to work with them.
Was this all contractual?
Yeah, it paid off over time. We lost money on that event, and I come from the camp of extreme ownership. So, for me, if you have a failure and you blame other things, then you don't get the juice out of that failure. You don't get the learnings from it. That's like the best part of the failure. And so for me, it was, okay, like, what can I do better? How do we pivot the business? Like, what do we need to understand from this? So first of all, I mean, Salesforce was very happy with us after that event. We got a great new partner out of that had deep pockets, which we were able to leverage in the future. So, that wasn't terrible. The second thing is, it really was apparent that the conferences were not going to be the future of this business, and we needed to find a way to pivot quick. And so we ended up pivoting to digital. We were one of the first to really take advantage of the whole like kind of virtual events and webinars and paid webinars and things like that well before COVID, which, during COVID, that kind of like jumped the shark. But before that, we were able to turn the conference business almost completely digital while cutting almost all of our costs, because a lot of our costs were overhead for events, and our revenue didn't really take much of a hit.
But are you able to charge the same amount for a digital as you were for an in-person?
Not from attendees, but from sponsors, roughly.
It's amazing.
We were able to, and we were able to run more of them. So we ended up having a much more profitable business, and it took this big failure and learning experience to be able to push us in that direction. And then, funny enough, 2018 came around, and we kind of plateaued a little bit in the current business, and said to myself, all right, we are going to have to pivot. We're going to have to open up new lines of courses or recruiting service or research and advisory for this business to get to the next level. So I can either spin my wheels on that for the next 6 to 12 months, and it may or may not work out, or I can look for potential acquirers. So I had this spreadsheet, and on the spreadsheet, it was a list of potential acquirers bucketed out by, essentially categories. So research and advisory firms, training and consulting firms, software companies, you name it.
By putting these companies into buckets, did you have here's the number one company that should buy us, and here's why. Here's the number two, and here's why. And did you kind of go through it like that?
I had relationship strength, the contact that I had there, likelihood number. It was like a proper CRM that I built into a spreadsheet. And we were talking to HubSpot, we were talking to LinkedIn, we were talking to a few other companies. They were coming with cash offers. And then I went to Outreach's conference in 2018, and I sat down with Manny, the CEO, and they had just raised money, and I said, hey, congrats on the Series D, $500 million valuation. Things are going great. You're the leader in this space. Amazing.
It's crazy.
Yeah. I said, what keeps you up at night?
And that's in what, 3 years?
3 years since my initial investment.
Yeah.
I said, what keeps you up at night? And he said, marketing. I said, well, I have the best-in-class media company in the space. You have the best-in-class sales technology company, as proven by the most recent fundraise. Let's make this thing happen. So he kind of sits up in his seat, pulls out his notepad. We start talking. He calls his EA over, says, cancel my next meeting. And we get going, and he's like, okay, I need you to meet with my COO and one of my co-founders and our CRO. Can you do it while you're here at the conference? Okay, so I pushed my flight back.
You're let me check my schedule.
We do this whole thing, and yeah, we get a deal done. 3 months later, we announce it, but we get the deal done, really within the next 4 weeks, and the rest of the time is kind of just legal, crossing T's, dotting I's type stuff. So I started working even before my first day. I actually hired my first employee before my start date. We started on the same day. We had a big conference coming up, Dreamforce, and then we had our own conference the next year. A bunch of money had been laid out, but no work had been done on these things yet. So I was like, if I'm coming in here, we gotta make moves. So I said to the marketing team, hey, who's our outsourced event team? Who do you use? Do you like them? And they were like, yeah, we use this woman, Melissa. She's great. I say, okay,
can you introduce
X something? I forgot the name of the company, but they're like, yeah, here's her info. Put me on an email thread with her. I get on with her and her company, and right after that call, I'm like, this is gonna be expensive to agency this whole thing out. We just need somebody in house to run this. I don't want to deal with this. So I go to her email. I go look in the signature. I see her cell phone. I call her cell phone. I'm like, hey, why don't you just come here and do this in house? Work for us. And, it's a win-win-win because we get you, I don't have to deal with this. You come here, you could probably get paid more and get stock. and work on this anyway. And your agency wins because if I don't hire you, I have to hire somebody else, and they're going to pick an agency, and they're probably going to pick an agency they've worked with before. So like your agency still gets to keep our business. And she was like, okay, that makes sense. And so we ended up hiring her.
Keep the business. So did you poach her and bring her on as an employee, and she left her company?
Yeah, and then we hired the agency to do a lot of the agency work. Like hiring her doesn't take away the fact that you still need to outsource a bunch of stuff.
Got it. So instead of
she
giving
just
them
runs the events.
Instead of giving them $100, you're giving them $40.
Yeah,
and you're giving her,
and she comes in house.
Amazing.
And so first of all, not only is it cheaper for us across the board, amortized across both of them, but I have somebody who works for the company who's now managing all that stuff that I don't have to manage.
Yeah, so you kind of now have all her trade secrets.
Yeah, exactly. And she works for us, and we're the only person. So like my meeting with her weekly is just a meeting with her, and then she goes and does it instead of like me having to meet with my team and then meet with the agency and then all meet together. It's like you handle the agency. I don't want to handle the agency.
Amazing.
And as a VP of marketing in a fast-growing business where you're running, a 20, 30-person team and you're doubling revenue, you can't be bogged down in the minutia of those types of things. You have to hire people you trust, and then give them the keys to the car and say, okay, go drive. So that was great, and ended up working at Outreach from 25 to 250 million in ARR. VP of marketing, so led marketing. We eventually hired a CMO. Ended up working in between marketing and sales operations. Worked very closely with our CRO, CEO, CMO.
And where are you living at
teams.
this time? Because
we moved to Seattle for this opportunity. Okay. That was the only way to do it. That's where HQ was, and and then in 2021 started this fund on the side, GTM Fund, with our hypothesis of, what if we raised $1 million from 50 of my friends who are go-to-market leaders? They all came to me and said the same thing. Hey, how do I diversify? If I go work for a company, I get my salary and I get stock over a 4-year vest. But if the company doesn't materialize, I get nothing for that stock. So if you had 2 sales leaders from Salesforce in 2012, and one went to go be the head of sales at Zoom, and the other one went to go be the head of sales at Achievers, they both worked there for 4 years. I mean, just by what happens in the markets, no fault of their own, the one at Achievers could be more competent, but the one at Achievers makes $0 and the one at Zoom makes $25 million. So they want a way to diversify too. So we started the fund, invest in early stage companies, and we ended up raising $6 million in 2015 instead of $1 million. We ended up raising $15 million in 2021. Then 2022 was $15 million.
How? What was so attractive?
We had a really unique value prop. Nobody else is doing this. I think, when people take money from...
Why was nobody doing it? Like something like this, it's like there's thousands upon thousands of smart VCs out there.
You got to play to your strengths.
Come up with it?
I just happen to have this amazing network of VPC level sales, marketing, and customer success leaders because I ran a media company in the space and then ran a tech company in the space. So I had that. And then on the flip side, two-sided marketplace, I've got them. I also had a great track record as an angel investor. So you have to kind of be able to be a good investor, have a good eye. You also have to be well connected in the GTM space and understand GTM yourself. Mm-hmm. So there's not a lot of people that have both of those things. So I found my sweet spot and, capitalized on that.
It's kind of like LeBron, LeBron could play big man. He could bring up the ball.
I'll take any comparison to LeBron I can get, I guess. I'll take that. But yeah, so that's the journey, and now raised a lot more money since then, investing that, really enjoying being on this side of the fence, from being an operator where, your hair's on fire all the time to now being an investor, and you're kind of like a grandparent versus a parent. Like, I'm not in the business. I get to come in, help out with things, but, then kind of zoom out. And for where I'm at in my life right now, it's great. It's good balance.
So you wrote 2 books. First was Sales Hacker.
3
books: Sales Hacker,
Career Hacking, and Sales Engagement. So Sales Engagement and Hacking Sales were both published by Wiley. Those are my sales books. Sales Engagement I wrote to build the category at Outreach of Sales Engagement. Hacking Sales was my first book. That was kind of like all the cool stuff we were doing at Udemy, and then throughout Sales Hacker, and then Career Hacking is the other one.
Career Hacking was great. Tell me about Career Hacking and how that came to be.
Yeah, in 2016 and 17, LinkedIn started like their news feed, and they had this crazy algorithm thing where like, you know, you could just post in there and you can get thousands of people that come to your content.
And you were living in?
This time I was in the Hamptons in New York and Miami. We're remote. I was running Sales Hacker. And I just kept posting these like snippets of kind of like things that I was thinking about that helped me in my career. And next thing, and I would, after they had been up for about a week, I'd copy and paste them into a doc. And then I'd also copy and paste how many likes and comments they got to see the engagement, to understand like what was resonating. And so you can create more content about the things that were resonating.
Not because you're analytical or anything.
Exactly, right? I mean, like kind of have to be. And next thing you know, I'm like, wow, I have 15,000 words. It's like, that's a book.
Yeah.
Let me polish this thing up. So I wrote my first book in Bali in 5 days, Hacking Sales. I wrote Career Hacking. After I had those 15,000 words already, I kind of strung it all together, chaptered it out, wrote the rest of the words in 3 days from Bali. And then Sales Engagement, we did a bunch of prep work on, but I wrote that from 5 days, from Miami in 5 days. So
non-Bali.
Non-Bali. But I like, if I could never be the type of person who's like, I will write for an hour a day and I'll finish this book in 3 months. It's like, no, it'll never get done. Yeah. I just have to sit in a space for as long as I can with no distractions, interruptions.
So this is like, phone is over there, computer's over here, I got the scenery and my fucking thoughts. Let's rock.
I've got like a butler that's bringing me food and drink. I'm standing up in the pool with my laptop on the side. Yeah. I'm in like my pool chair. I'm in my room, wherever, and I think, let's see. The first one was from Gilly T. Hacking Sales I wrote in Gilly T. I think it's like Lucid de Arma or something like that was the name of the hotel. And then the second one I wrote from the Como Shambhala in Bud in Bali. And then the third one was from one hotel in Miami.
Beautiful.
Patio, yeah.
Beautiful. So what do the next 6 months look like for Max Altschuler?
Next 6 months, more of this. Investing, supporting our portfolio companies, and fundraising is a never-ending game. Balance, seeing my wife and kids and dogs as much as I possibly can. Not being on the road as much as I was in previous businesses, and learn to play golf. So trying to get into that a little bit, down Beautiful. To an 11.5 handicap. So.
You live in Scottsdale, so you better.
Exactly. Yeah. I mean, the key to playing golf is like you don't want to get too good because then you're probably spending too much time doing it. Yeah. But it's been fun, and it's peaceful, and it's helping me with patience, and it's also one of those sports where like you can't just play harder. If it's not in your bag, it's not in your bag, and so that's new to me. I can play anything as long as like I can out hustle you. I can be decent,
non-golf,
but not in golf. So,
do you have any passion projects, like something that like, all right, this isn't really a SaaS play, but it's something that I enjoy? Maybe like, I don't know, like a hockey media online, like not that it would be that, but any sort of passion project that you want to touch.
Yeah, not really. I think I'm in the phase of my life right now where I'm kind of optimizing for like more balance, and passion project is spending time with the kids, and like they are like building them is the passion project, and I think that's where my time is most importantly spent.
Out of all the companies you've worked for, where would you put fatherhood in the level of I guess role title?
Yeah, I mean fatherhood's P1. That's top priority. I mean that is something that means the most to me, and is going to have the most outsized outcome on happiness and life. And I think I planned it out right. A lot of the other stuff I did before fatherhood got me to a place where like I don't really need to work for money. I do it because I like it. I do it because it's fulfilling. I do it because I really don't know what the hell else I'd do. I can't play golf every day.
You could.
I wouldn't like it. Yeah, I need to be cooking. So, I really enjoy the balance that I have right now, and we'll see. I mean, I think in a couple of years can reassess. I try to re-underwrite every year, where I'm spending my time and, what fulfills me. And right now I feel, in a really good place about that.
Amazing. What are you reading right now? I'm assuming you have to read. You wrote 3 books.
Always read.
You may not have time for paperback, or maybe you do now.
Yeah, I do. I mean, I actually am listening to this one on Audible, but it's called The Courage to be Disliked.
Did someone recommend it to you?
Yes, and it's super fascinating.
Can you
book.
tell us who recommended it?
Yeah, like tech friend of mine.
Maybe it was like a CFO of Datadog.
Oh, okay. Ryan Hoover. No, just random person.
Okay.
Yeah. So enjoying that one. I think it's a lot of these things are somewhat self-helpy, but it's good to hear the concepts. And for me, I think with my extreme ownership mentality, just continuing to reiterate that everything is within your control.
Amazing.
And like you're in charge of your destiny. Nobody else is. Luck, good luck, bad luck. It's all bullshit.
Now, do you have a Bible? Like, what I mean by that is, do you have like one book that you recommend to anybody? Like, Max, I want to do what you do. That's not a thing. But here's one book I want you to go read, and then let's chat.
I carried a copy of The Greatest Salesman in the World by Og Mandino around with me in my backpack for like probably the first year of my career at Udemy. And just some really great guiding principles in there about life. But the underlying, I'd say, story is you can kind of be anything you want to be, and that like entrepreneurship and sales is the ultimate level playing field. And I just kind of lived that and saw that as I grew up. I mean, in almost every room that I'm in, I guess at certain times it's like you've got Ivy League people, you've got investment banking people, you've got people who all were better than me in all those areas, yet here I am, this kid who got terrible grades and went to ASU and doesn't belong here, right?
Being in a room, and I'm sure it comes up, being the guy who went to ASU versus Stanford, Yale, Emory, even like just
yeah.
I mean, as an Arizona guy, obviously, like I want to talk shit, but you're one of the more successful people that I know. You went to ASU.
Yeah.
How was ASU when you're in a room? How was saying you went to ASU in a room?
Doesn't come up anymore, because that's the thing. Once you have enough, success and traction and other things, like those are the things you get judged on.
If anything, maybe it's now just like a conversation, and it's not like it's just like, oh, cool.
Doesn't come up.
Not even.
Or if it does, people are like, oh, that's a cool party school. Like, I'm still in the fucking room. Like nobody's ever like, oh, haha, you went to ASU.
Yeah.
So yeah, I think Greatest Salesman in the World is one I highly recommend, and I think I owe a lot to the fact that like anybody, you can really, once you get out of college, do whatever the hell you want to do, or once you get out of high school, do whatever you want to do, and it's all a level playing field.
I'm gonna pick that up.
Yeah, check that one out.
And I guess before I let you go, give me one word of advice for anybody trying to make it.
Oh man, probably want to go away from some of the other stuff people said, otherwise it gets too redundant. So I'm going to go with agency. And it comes back to the extreme ownership point, which is you're in control of everything. And you learn from your failures, make no excuses, and own your destiny. And it's up to nobody else but yourself to do so. So I think we try to hire high agency people when we talk to them who understand that stuff. There are low agency people who, like we talked before the podcast, just kind of content and complacent and really don't want to do better, be better, blame other things. Agency. Find a way to embrace the fact that like you were the only one that can decide or dictate what's going to happen to you.
And social media probably makes it harder for a younger generation to own that.
Yeah, I'd imagine. It's tough. Social media is a fucking blessing and a curse.
God bless.
Yeah.
Dude, great interview.
Yeah.
Max Altschuler. You can find him on IG at
Hackett Max, I think.
Hackett Max. A link for all 3 of his books will be on bookshop.org. And have a good one.